Hey traders, today we're diving into a powerful option trading strategy, the LEAPS and poor man's covered call that will generate 10% or more per month in profits. Before we get started, be sure and hit the like and subscribe buttons down below. Let's get at least 100 likes. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Guys, NVIDIA is up 173% in 2024 due to its dominance with AI products and its GPUs. The key strengths are its technology leadership. NVIDIA is the pioneer in GPU technology and AI computing. It also has market dominance. The company holds approximately 95% share in AI training and inference chips for data center applications. Its financial performance is outstanding. It's achieved 152% revenue growth over the last 12 months with a 75% gross profit margin. And it's very innovative. They're continuously developing groundbreaking technologies. And lastly, its strong ecosystem. NVIDIA's extensive software and developer tools ecosystem contributes heavily to its competitive advantage. There are several factors driving NVIDIA's growth. The AI boom is number one. It's increasing demand for AI technologies from major tech companies like Meta, Alphabet, and Microsoft have boosted NVIDIA's GPU sales. Data center growth. That segment has been a standout performer with revenue increasing 17% quarter over quarter in Q3 of 2024. And next generation architecture. The upcoming Blackwell platform is expected to deliver significant performance improvements, potentially widening NVIDIA's technological lead. All right, let's take a quick look at the LEAPS option since that's what we're going to use for this poor man's covered call strategy. LEAPS stands for Long-Term Equity Anticipation Securities. And what it is it's a deep in the money call that we're going to purchase. And LEAPS are typically 9 months to a year, even up to 2 years DTE, days to expiration. So they're a little further out in time than normal options. Now, the key advantages of LEAPS options include lower capital requirement. So in order to control 100 shares of NVIDIA stock, you can do that for a fraction of the cost of buying the stock outright. It's also defined risk, so your max loss is limited to the premium paid for the LEAPS contract up front. You're also utilizing leverage, so the potential for amplified returns if NVIDIA stock moves up in price favorably is huge. And slower time decay. LEAPS are less affected by time decay or theta decay in the short term compared to shorter dated options. Now we can transform our LEAPS option into a poor man's covered call. We do that by buying the deep in the money LEAPS call option first with a delta of 0.65 or higher and an expiration at least 9 months out, and then we sell an out of the money short-term call option against that LEAPS option, and typically that will have a 30 to 45 days to expiration time frame on it. Some people like to do the weeklies as well. And as the short call expires or becomes profitable, we buy it back and then repeat the process by selling another monthly or weekly call option. We continue this cycle monthly using the premiums collected to offset the cost of the LEAPS option contract and potentially generate additional income. Okay guys, so I'm on the Tasty Trade option trading platform, and this is one of the platforms I use. I also use Moomoo. There's links down below to both and benefits offered through them by Tasty Trade and Moomoo if you utilize those links. So I appreciate it. And we punch in NVIDIA up here in the upper left. So ticker symbol is NVDA. And then we are on the table mode and the trade page. Trade page, table mode. There's table and curve mode. But right now we're on table. This brings up all the different options chains. And we're going to go out to the September 2025. So 285 days to expiration. So about 9 months. And then I'm going to click on the buy. So we've got calls on the left, puts on the right. So we want to buy a call, and we're going to go deep in the money. So remember in the video I talked earlier, I talked about 0.65 range or higher for delta. So that more closely, the higher you go, the more closely it will emulate owning the 100 shares of stock outright. And this will emulate it to about 65 shares per 100 or 65%. So we want to stay above that. So we're going to click on the 130. That's a nice even strike number. And you see here 32.55 is the buy price. We'll click on that. And if we go down here, we'll go in the mid price, and we should be able to get filled at about 32.20. Now, one option contract controls 100 shares of stock. So this is really $3,220 that we're paying for this one option contract. But if we were to purchase 100 shares of NVIDIA outright at $142.44, it would cost $14,244. So we're doing it for quite a bit less than that at $3,220. So we do that. We can go to the curve mode here, and then you can see over here as the stock price moves up in value, we profit just like owning the stock. So at this 32.20 here we make 2,000 our P&L expiration at there's $182 strike price, and my target for NVIDIA is up there at 180, 200, no problem. So I can see it getting there. But so now we've got the leaps option. So we want to add a poor man's covered call. So we go to the table mode and close up the September. We've got the buy still on here. And then we can go 40 days. I like to go 30 to 45 days out to expiration. So the January 25 option chain will open up. And again, we're going to the call side. However, this time we're going to sell a call against it. And I want to collect about $400. Well, really, we want to be around that 30 delta strike range. But if we go out here to the 151, we can collect $4.20. We can even go down one lower and collect $3.95. And you see that buy is $4.05. So right in between there's $4. We can collect $4 on this trade. That'll be the mid price. Now that lowered, you see, from $3,200 down to $2,800 our cost. We hit review and send and place the poor man's covered call. Now, if we close that up and we close the September and remove that, I just want to show you the call option on its own so you kind of understand a little bit better. It's more clear. But if we go, we're trading at 142 right now. Now we're going to sell that out of the money call for right here. We're going to sell. So we click on the sell, and then the mid price right here, right in the middle, $400. So we collect, as soon as we place this trade, we collect $400 for selling this. Now if we go to the curve mode, you can see as long as we stay below this price, we are profitable and we keep that full 400 in the next 40 days. Now, if it moves up above that, that's good for our leaps option. So they counteract each other. So the best thing would be for it to move up right to our 152 short strike, because we make profit on the leaps on all the way up to that 152 and above. So we can potentially make profit on both sides. All right, guys, now I'm going to break down how we get that 10% monthly return, which is over 100% per year. Well, we choose the appropriate NVIDIA LEAPS call option with the delta of 0.65 or higher, and you saw where we bought that for roughly $3,200. And then we sold a short-term out-of-the-money call against it at 40 days, so typically anywhere between 30 and 45 days. And then we collected $400. Now to calculate your monthly return potential, and again, it varies. Some months we won't do quite this well, but we may do it, and we may close it out earlier and then put another one on in the same month, so we can do better than this as well. But we calculate the monthly return potential by the premium received divided by the cost of the leaps times 100. So it's $400, which was the premium received, and then the cost was $3,200, and we multiply it times 100, that's 12.5%. So we're achieving the 10% monthly return if that all works out in our favor. Now we aim to collect premiums between 10% of the LEAPS cost each month. So if it costs $3,200 and $400, then you see how that works. So to adjust the strategy, we select strike prices that balance the premium income with the risk assignment. And we roll our short calls when they reach 50 to 75% of the max profit to increase overall returns. So that's something that we can do as well. These are just possibilities to adjust your strategy. We can consider selling weekly calls as well for more frequent income opportunities, but be mindful of increased management. It takes more time to do that. And then we also want to consider rolling out our LEAPS once we get to that around that 6-month time frame. So we bought the 9-month, and you can even buy the year and then not have to deal with it as much. You know, we're long-term bullish, so that's why we're buying the LEAPS. But once we get below that 6-month, really in the last 2 months, in the last month, really, the time decay really starts to decay quickly. So we lose value in the last month much faster than we do at 6 months out. So we can roll that option from 6 months back out to 9 months or a year, and it's not going to be that much cost in order to do that. We always want to implement risk management strategies as well. And we kind of talked about those, but another one is position sizing. We want to limit our positions to a small percentage of our portfolio overall. So, you know, depending on the size of your portfolio, you don't want to put more than 5% in any one position. At least that's the rule that I go by. Also, you want to manage your deltas. So we talked about 0.65 or higher for the LEAPS. That's what I recommend. Profit taking, you can have it move all the way to expiration as long as it's below that short call strike. Or some people choose to take profits at 50% and play it and see if it comes down a little and they sell another call against it. So there's different strategies that you can play with there as well. And then time to expiration, we talked about once you get down to that 6-month range, that's when I like to sell the option to close and then buy another one out at 9 months or 12 months in the future. All right, guys, be sure and like and subscribe down below. Remember to comment, ask a question. I answer every one. I love comments. That helps get the video out to more people. And download that free options workshop in the link below as well. Thanks for watching. I'll see you in the next one.